Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
All right. Hey guys, welcome back to our show. I'm your host, John Harcar, and we're here today with David Tuck. And we're going to talk about, besides his journey in business, we're going to talk about different tax strategies that you could use in real estate. Remember, guys, at Investor Fuel, we help real estate investors, service providers, all real estate entrepreneurs 2 to 5x their business. And it's by providing tools and resources to build the business you want to have, which in turn helps live the life you've always dreamed of. So, David, welcome to our show.
Thanks for having me. I'm excited to be here.
Yeah, I'm excited to talk about our topic of tax strategies. We all know we want to, to be able to save money and obviously do the best we can on our tax part. But before we talk about that and get into the weeds, tell our audience a little bit about you, kind of your background in business, if you do anything in real estate, and kind of what got you to today.
Yeah, absolutely. So real estate is powerful, and they're not making any more of it, right? So we want to capture it. And there's so many tax advantages to owning real estate, to being a real estate investor, to being a real estate owner, as well as it's sexy, it's fun, right? Houses and buildings, it's art, it's amazing. And so also that's freedom, right? Having land, having that room to just be yourself, right? And not worry about the speed limit or whatever. Just have your kids ride ATVs. I grew up on the farm. I grew up out the wheat fields of Sherman County, and everybody was farmer kids, or they worked for farmers or whatever. And so there's quads and motorcycles and all the fun stuff, right? And everybody had trucks, and it's all a business write-off. And I was like, these guys are smart, right? They were deducting boats and helicopters and planes and stuff because they need them in their business. But it's all revolved around real estate. And there were smart farmers. There were Stanford PhD professors that were farmers, and farmers are smart. Right. So real estate is everything. Having land, having that autonomy, having that freedom. Who doesn't want to have a little bit of land to kind of homestead and stuff like that? So real estate just really got to me. I'm like, yeah, this is where it's at. And so I got my degree in accounting, then went to work for the IRS as an auditor before I gave him the finger and walked away. But I really cut my teeth on taxes, cut my teeth on what the IRS is looking for and why. And now I want to empower people. I want to tell my secrets and give those secrets out and be like, let's all save money on taxes. Let's do things legally, ethically, morally, and above board, but let's pay the least amount of taxes. So part of it's dumbing it down, and part of it's educating, right? And trying to meet in the middle type of thing.
Right. What made you decide back, and if you ever watched any of my podcasts, I like to go back. What made you decide to do anything with the IRS and tax auditing and all that stuff? Have you always been a kind of numbers guy?
Well, it's more law, right? The numbers are more third grade math.
Okay.
Right? So the math's not very difficult. It's more application of the law and knowing the law. But more than that, it's knowing people, and especially dealing with the IRS. And a lot of people think, oh, the IRS in tax law, it's black and white. No, there's so much gray in it, and it depends. It's up for interpretation. Who wrote the tax law? A bunch of attorneys. Who interprets the tax law? A bunch of attorneys. Who says the law is the law when the law is the law?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
A judge, right? Who's an attorney. So if you read the tax law, it's complicated. It's mumbo jumbo. It doesn't make sense to the average person. Why? Because it was written by attorneys. So I wanted to get a heads up, and I looked at entrepreneurship. I looked at Warren Buffett, right? He was a big inspiration when I was in high school and college, and he was an investor. He is an investor, and he's contributing so much to the world by providing jobs, goods, and services. And small business provides more jobs than big business, than government. And so there's this aspect of, I want to do good. I want to bless people. I want to serve. And so being an auditor, going and learning, it's like getting a master's degree. And I learned a ton from the IRS, and now I'm on the other side helping people. So it was more of a educational experience.
Still getting hate mail? I'm just curious, as an auditor, did you ever get like hate mail? Like, why did you audit my, after you audited someone? And
yeah, people get pissed. I mean, even though I was more of like, I kind of felt like a preparer on the inside, and I was like, I'm here to help people. And I kind of said that too many times, too loud. My manager's like, come here. I'm like, you shouldn't be saying that. I'm like, it's a joke, relax. And they're like, you probably shouldn't work here. I'm like, yeah, you're right.
So what made you leave the IRS?
Yeah, it just, everything has seasons. So I went, I got the t-shirt, whatever. I mean, I did it, right? I learned, and then it was like time to move on, time to exit, because I couldn't deal with the bureaucracy. I couldn't deal with all the red tape. And it was just, I'm not a very good employee. Right. I'm more of an entrepreneur. I want more autonomy in my schedule and to do what I want, when I want, how I want it. And that's where being a business owner, being an entrepreneur, being an investor, a landowner, you have more flexibility, more freedom, more write-offs too. And when I was auditing, I was recognizing, man, this person that I'm auditing, they're writing off their breakfast, their lunch, their dinner, their whatever suit, and all this other stuff, their watch, and all this stuff. And I wasn't able to write off anything. And I'm like, I'm getting hosed. And legally, ethically, morally, they were able to do it because the tax law said. I'm like, this sucks. I'm gonna fire my boss and become my own boss, and then have a lot more write-offs.
What struggles did you have when you went and just started on your own?
Yeah, just like with anything, getting clients, getting the word out there, and having established relationships. So I went to a lot of networking events, did a lot of presentations, talked a lot, and that was really helpful. So I had to hustle. Get business, prove myself, made mistakes along the way, but just learn and just had fun. And right now I'm kind of reinventing myself. I'm doing more podcasts and presentations, and
awesome.
I'm speaking at a group down in Orange County pretty soon, doing 2 presentations, one on IRS bias and how to negotiate, and another one is on learning management tools and having a learning management system to help you. And I use Kajabi. Kajabi's great for email marketing, text marketing, having courses, having community, all these things, platforms like branding yourself. Right now I'm branding Anvil Tax.
Got it.
It's like, I think everybody needs to have some type of brand, and having distribution, doing podcasts, doing book, I've a couple books, so I'm writing more books.
Yeah, we actually had at our last mastermind that just passed there in Dallas, we had someone talk about branding. I unfortunately didn't get to go, but and now you're going to be at speaking somewhere in Orange County, California?
Yeah.
Okay.
So
you grew up.
Oh, cool.
Yeah, that's cool, man. What's the group called?
Yeah, it's Mark Kohler. Yeah, he's a CPA's attorney.
Okay.
It's the Tax and Legal 360 conference.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
This guy is just doing some pretty awesome stuff. I'm part of his community, and there's over 100 accountants, CPAs, attorneys, financial advisors in their group.
Okay.
And a couple thousand people probably going to show up.
Wow, that's awesome.
That'd be great.
And you have your two companies, I think on here, Anvil Tax, and then you also have a website, mytaxsecrets.com.
Yeah, and that's my learning management system. That's the Kajabi system,
Okay.
and it has a course on there which is called my a Simple Start course. So it's beginner's guide. I want people to know what and how, when, why, where the IRS is looking for, how to reduce your taxes legally, ethically, morally, how to document. Like in real estate, it's location. For taxes, it's a document. So these are my secrets that I learned from the IRS, but I wanted to be exposed. So
cool.
This is the learning management system, and I'm just really geeked out about it. And I want to be doing more courses. It just takes time. Courses are kind of a lot of work.
They are. No, they are. Is it just you on your team, or what does your team or your business look like?
Yeah, I have some admin and some accountants that help me, but I also network well with other professionals, bookkeepers and attorneys. And it's like going into surgery. You have a whole team, or going on an airplane. Like there's a whole team involved. So I feel like more of a project manager, and I communicate with other professionals.
Mm-hmm.
It's kind of like in real estate. It's like you have a general contractor, but then you might need an engineering study because you want to take out that wall. Is it load bearing?
Yeah.
What do you want to do? And then you got painters and different contractors. So I'm not a jack of all. I want to specialize, but I want to try to lead that conversation and lead everybody together to help people to accomplish their goals.
Awesome. So let's start talking about some of these different tax strategies that you can use in real estate. I guess first and foremost, like when it comes to people doing their taxes in real estate and all that type of stuff, what are the mistakes that they're making? I mean, I'm sure there's a ton that you come across, but what are like maybe the top 4 or 5 mistakes that you see people make, or 3 or 4 mistakes?
Absolutely, and that's a really great question. I cover this in depth in my course, which is what typically sets off the bells and the whistles for the IRS to come knock and to audit. I call those large, unusual, questionable LUQs. It's an acronym because IRS loves acronyms, right? It is an acronym. So it's acronym rich. So large, unusual, and questionable. What does that mean? How is that defined? What is IRS looking for and why? So let's unpack that a little bit. If you have a minute, I can definitely go through that. So if you look at materiality means, how important is it to the overall bottom line or to the income that the company makes? So like, for instance, Boeing or Tesla or GM or whatever, right? If there's a mistake on the books and the financial statements of $1 million, who cares? A $1 billion company, it doesn't really matter, right? Materiality. But if you have a $100,000 company, a $10,000 mistake could be a bloop, right? It could be a material thing. So we look at materiality based upon the size, scope, and all that other stuff, right? So we apply some logic and reasoning and intuition. Mm-hmm. It's also looking at something. I'm going to give another example, a metaphor of, you see a red dot on the wall, right? And that's all it is. And it's like, what is that? That's weird. But if that red dot is tied to a period, maybe there's a mission statement or a statement and there's that period. Well, that makes sense. It's within a context. But if it's just by itself, it's like, that's weird.
Yeah.
That is part of a large, unusual, questionable. You look at a tax return, or if I look at a tax return, I'm like, there's a bloop. That's weird. Why is that? Depending upon materiality, depending upon what happened. Now, again, there's fires like down in LA or disasters or whatever. Yeah, I mean, there could be these large expenses because of that. Okay. But for everything else, for instance, realtors, drive a lot, right? Realtors have a lot of miles, so they live in their car.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
They're going to have probably one of the biggest expenses is probably going to be mileage. And that could be a bloop, right? So document, and not be afraid of the IRS, but just recognize, that is a large, unusual, questionable. But for a realtor, maybe not. However, if we can spread things out and to smooth it down and not have it so bloop, then we can hopefully reduce our audit risk, legally, ethically, morally, of course, bring that baby down and let somebody else get audited, right? Let somebody else have a turn in front of the IRS, not me, right? I don't want to get audited.
So how do you bring it down? Like, do you just disperse it over different areas? Or
Good question. Yeah, this is smart, right? So you're asking great questions. So I have a expense spreadsheet, and the course is based upon this expense spreadsheet. And there's like 47 different expense categories. Not everybody's going to use 47 different expense categories, but what we want to break things out into is smaller categories. But I want to put everything into context, right? I like to use the example of a dog because I have my dog Willow, and I record daily videos down at the park, and we do Willow tax talks, right? So she's a cute yellow lab, and I just love her. She's sleeping right here, probably starts snoring. But anyways, so who is the tail wag the dog or the dog wag the tail, right? And I'm using this example metaphor. Hopefully I don't lose you, but we look at what is material. We look at why do we prepare books and records? Well, we prepare books and records and accounting, not just for the tax system, not for reporting and paying taxes, but also for forecasting and for managerial purposes, right? Does this campaign, does this product, does this make sense? Am I going to make money? Is this enough money that I want to be making? Should I invest in this? It's actually a negative ROI. That's great because it's bringing in money over here, like mini marts, right? A lot of mini marts sell gas to sell cigarettes and Slurpees and everything else, right? It's a loss leader. But if you know that, if you've done the accounting on it, that's great. You've been empowered and you know what that loss leader is. And if you took that away, how much more sales of chewing gum and everything else and lottery tickets would you lose if you didn't have that? So it's one of those things. In real estate, I don't really have a good example quite yet. I wish I did. But there could be some loss leader type things to get people in the door to start buying and have more upsells. And you can do that with like Kajabi and selling books and products. And you see that all the time. You go buy something, a course or whatever. It's $10 and then next thing you know, it's $150 or $3,000. You start going up because it's all these upsells. So thinking about what's to have managerial accounting to break out those expenses into smaller bookkeeping. Let's make decisions. So if you have managerial accounting and then you're going to go the tax return, prepare the tax return based upon managerial accounting. I look at some of these items on the tax return and say, from a linguistic standpoint, does it make sense? I don't know. What's blue, right? We've agreed that blue is blue because we both agreed on it. But some of these items on the tax return, I'm like, well, okay, I've got my managerial accounting over here, and then I've got this tax return. The tax return is really small. Like managerial accounting's big. I guess I know where I'm going with it, and I've mapped it out. So if I get audited, that in some of those line items, maybe doesn't match up exactly. And so for the anal accountants who are just like, well, that line item says this, you can't put anything else. Why? Who says? It's linguistics. We agreed, but I disagree. And I got my bookkeeping. I can prove it. I can verify it. And I'm not going to create large, unusual, questionable on the tax return by lumping everything together into 3 or 4 items and then bloop. And then I've got all this white space. It's kind of like in college where you filled out blue books or whatever, wrote essays. And it's like, you just don't want to leave things empty, right? You want to fill up the freaking blue book. Yeah.
Fill up the blue book.
Right. So fill
So
up the tax
what other
stream.
mistakes are people making? Especially
Yeah,
and people you've dealt with real estate.
Oh yeah, depreciation. Oh, depreciation is so complicated, and especially with, for instance, we can't deduct the land, right? Because we
Right.
have to allocate and bifurcate out the land versus improvements. So what's land, what's improvements? Typically, we'll look at the county assessment and say the county assesses this building at X amount and the land at this amount. So they usually call it improvements on the county assessors. So
Right.
we come up with the ratios. In bigger urban areas, it's probably a 30-70 split. 30 goes to land, 70 goes to the improvements. And so then we just take that ratio, whatever that ratio is, and then we apply it to the cost of the building, right? And so, but there's a lot of other costs that go into it, closing costs and repairs and maintenance and everything else. So
Right.
the problem is people don't depreciate correctly, or they don't allocate out the land. They include everything in to the depreciation, including the land, which is a no-no. And so that could be a red flag because depreciation's large. Another thing is, or they don't take it at all. And with depreciation, there's something called allowed or allowable. And so when you go sell that property, if you didn't take it, you have to recapture it as if you did. And so that recapture rate is better. It's a preferred tax rate. It's a lower. It's sometimes higher than the capital gains rate, but still it's like a loan. If somebody's at a 37% tax bracket and they're taking the depreciation, but then they have to pay back 25, well, they have that delta. They have that spread. That's a loan, interest-free loan. So yeah, I'm going to take that. Yeah, I'm going to have to pay it back. Okay. What if I do a 1031 exchange and bump it up, and then I got a new property, I do a cost segregation study, and boom, boom, boom. I go for 30 years, now I got this $20 million Plex, and I can't do cost segregation anymore because I can't find it. I can't do a 1031 because there's no other, $20 million Plex, because you got to be like equal or greater value
Or
on
greater
the
than, yeah.
1031. And then you got 45 days and 180 days. It washes out, especially on bigger deals. And so what if you could do something different? What if you could, and as well, somebody might be tired of toilets, tenants, and trash, and taxes, because they've been doing this stupid game at 1031. They have bases for the last 30 years, and it's like, I just want to be done with the thing. And most accountants are like, well, sorry, you had your fun, you got to pay the tax. Well, not true, because there's deferred sales trust, there's charitable remainder trust, there's all these things that we can do on the back end where you don't have to actually pay that back or pay it back over time instead of getting hit with that big tax tsunami.
Right.
We can defer that out. And that's what I get geeked about, is like, let's look at the exit, because if somebody's going to exit and they're like, I got to pay 48% to the government, Fed and state, especially if you're in California, high tax state like California or Oregon, man, it's a killer. It's like, why don't I just take it to my grave and do a stepped-up basis and keep borrowing? But people are so tired of toilets, tenants, and trash and taxes. They're just like, I just want to be done. And so most accountants, again, they just don't know these complicated strategies that are reserved for the 1%.
Right.
But I've done due diligence. I help people, and I get excited about that, because if we can reduce that taxes legally, ethically, morally, defer them out over time, you don't get hit with that tax tsunami. You can reinvest it in other things. You can buy a franchise or do other things with it. Great.
Cool. If folks are out there that are listening to us, and they want to get in touch with you, I mean, you obviously have that ebook or that what you have, I think was on your what is it? Where'd it go? Your taxsecrets.com.
Yes, yeah, my tax secrets.
Can they get a hold of you there, or if they want to talk to you about their tax issues, how do they get in touch with you?
Yeah, Anvil Tax is probably going to be the best. ANVILTAX.com. It's going to be the best, or even at my tax secrets.
Okay. Yeah, and we'll post those back. Is there any last advice you might want to give our listeners regarding taxes, strategies, etc.?
Yeah, and I think I do, and it's keeping receipts and keeping things electronic, because the way I'm seeing as the IRS is getting the chainsaw and cutting in half, but the IRS is typically, Congress gives IRS $1 and IRS gives Congress back $37, right? So audits are a real big deal. And as the auditors humans are getting cut, AI is going to start replacing it. It has to, because it's cheaper. But how do you negotiate? How do you deal with AI? You got to keep receipts. Keep them electronic. There's a lot of great apps out there for that.
Okay, cool. All right, well, guys, I hope you enjoyed this show. David, thank you for coming on and talking about all that. I hope you guys took some good notes. I know I did. And I look forward to seeing you guys on the next one. Cheers.
Cheers. Thank you.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.